Welcome to today's segment, where we break down a major development in India's trade policy. The Indian government is moving quickly to protect its exporters from the impact of steep new tariffs imposed by the United States. These tariffs, some going as high as 50%, are expected to hit key Indian sectors like textiles, chemicals, seafood, and machinery. Today, we'll explain exactly what's happening, why it matters, which industries are affected, and what steps India is taking to soften the blow, all in clear, simple terms. Recently, US President Donald Trump announced an additional 25% tariff on certain Indian goods. This is on top of existing duties, which means for some products, the total duty will now be 50%. The state reason to punish India for buying Russian oil and weapons. Now, a tariff is basically a tax on goods being imported into another country. So when the US raises tariffs, Indian goods entering the American market became more expensive, making them harder to sell. According to trade analysts, India exported goods worth $86.5 billion to the US last year. With the new tariffs in place, sectors like apparel, engineering goods and marine products, gems, jewelry and chemicals could see a drop in exports of up to 40% if the situation continues. This could also slightly slow down India's overall economic growth by about 20 to 30 basis points, which means the growth rate could fall to around 6.2% this year. The most vulnerable sectors are textiles and apparel. India is a big exporter of garments to the US. Higher prices could push buyers to shift orders to other countries. Seafood and shrimp exporters, the US is a major market for Indian marine products. Organic chemicals, a significant part of India's chemical exports, goes to the US. Machinery and mechanical appliances. This includes industrial equipments which will now cost more in the American market. The center is working on a multi-ministry export promotion plan. This is not just one department working alone. It involves commerce, finance, MSME, textiles and fisheries ministries. Key parts of the plan include credit guarantees for small and medium exporters so they can borrow money at low interest rates, faster clearance for export shipments so goods can move quicker and cost can be reduced. Export incentives, possibly raising the duty drawback rate from 1% to 5%. Duty drawback is basically a refund of import duties paid on raw materials used to make goods for export. Interest equalization scheme, this offers subsidies on loan interest rates to help exporters reduce borrowing costs. Rupees 20,000 crore funding corps to support these measures. This plan builds on something announced earlier in the Union budget for 2025 to 26. The Export Promotion Mission Finance Minister Nirmala Sitaraman already allocated rupees 2,250 crore for helping exporters get credit, deal with non-tariff barriers and tap new markets. But now, because of the US tariffs, the mission is being tweaked to focus more on the sectors facing the biggest losses. Industry groups confirm they are in constant talks with the government. Exporters are giving feedback on what kind of support they need right now and what can help them survive in the long term. The aim is not just to handle the immediate crisis, but to build a resilient trade strategy that can handle global shocks in the future. At the moment, no retaliatory tariffs are being planned. Instead, India is trying to solve the issue through dialogue and by looking for new export markets. The focus is on protecting farmers, fishermen, and small businesses that depend on overseas sales. During the inauguration of the new Intellectual Property Office building, Commerce Minister Piyush Goyal mentioned that India is simplifying intellectual property laws to make doing business easier. The government is also seeking suggestions from stakeholders to further improvement that Atmanirbhar Bharat initiative and make India businesses stronger in the global market. To sum it up, the US tariff hike has created a serious challenge for India's exporters, especially in textiles, chemicals, seafood and machinery. The Indian government is responding with a multi-ministry action plan offering credit support, faster clearance, export incentives and exploring new markets, all to ensure exporters can stay competitive despite the higher costs in the US market. Whether these measures will be enough depends on how long the tariffs stay in place and how quickly India can diversify its trade relationships. You have been watching the segment on India's export strategy in the face of rising US tariffs. Stay tuned, stay informed, stay aware, and remember, in the world of trade, challenges often spark innovation.